Thank you for joining CMB Regional Center's webinar. Our event will be starting shortly. We're excited you could all be here today. Thank you. Hello and welcome. We'll be allowing just another couple moments for our attendees who are just joining us to settle in. Thank you very much. Hello to all of our attendees. I am Andrew Radosevich, Global Market Specialist for CMB Regional Centers. I'm happy to be your host for today's event. On behalf of CMB Regional Centers, a warm welcome to all of you that were able to join us. It's truly our pleasure to have you here today. We're delighted to present to you another event in our Coming to America series, your EB5 Action Plan, Personal and Financial Strategy, Building a Good Credit Score in America. We hope you find tremendous value in our discussion and presentations today. The information shared today is for educational purposes and not meant to be taken as legal or directed advice. So today, we have some distinguished guests to lead our conversations. First, Ms. Dianne Stewart, President of Pathway USA. Dianne is an expert in international relocation, as it is the focus of Pathway USA as well. She and her husband, Bruce, have been able to assist over 1,500 families to successfully transition their lives to another country and has been doing so since 2006. Next, Dr. Bruce Stewart. Dr. Stewart was born in South Africa and is a citizen of South Africa, Ireland, and the USA. During his early career, he worked as a professional salvage diver, as a police detective, and as the Assistant District Attorney for the Department of Justice in South Africa. Entering the corporate world, he served as a Public Affairs Manager for the Coca-Cola Export Corporation, and then as Group Public Affairs Manager for Consol Limited, South Africa's largest glass, plastics, and corrugated packaging company. He started his own intelligence management training company, ExecuRead, in 1975, and with increased demand for his training from various sectors within the U.S. military. And finally, Mr. Kai Boyle, Vice President with CMB Regional Centers. Mr. Boyle has over 25 years of economic development experience. Kai has hit a milestone last month, completing over a decade of service with CMB. It's safe to say that he is one of our most traveled and valued members in our organization, and thank you for all you do for our company. Today, we will start out with Kai speaking briefly about CMB Regional Centers, and he'll cover our current projects. Dianne will then be discussing how she and Pathway USA assist their clients in transitioning their lives to America. Finally, Dr. Bruce Stewart will cover our main topic of the day, how to build a good credit score in America. Following Dr. Stewart's presentation, we will look forward to an interactive Q&A. Some of you have already sent in questions ahead of our event today, and thank you for those. If those questions apply to our topics today, we'll start with those questions first, but we still encourage you to please ask questions using the Q&A buttons and controls located in the webinar control field today. If your questions happen to be related to very individually specific matters, we request you please reach out via the contact information we will provide during the event today. And we will try to address those questions to you after the event. And one final last reminder, we will be leaving your audio muted for the entirety of today's event. So without further ado, Mr. Kai Boyle.
Thank you, Andrew, and thank you to our distinguished guests who are part of this event. I have to say that this is one of the most interesting panels that we've had in our Coming to America series, and I think you'll find that it is of terrific interest to those who are coming to the United States as immigrants. But if you happen to already be here, I think you'll also find it very interesting in the fact that we already know, those of us who are already in the United States already know the value of a good credit score. And Bruce is going to talk about how to build a credit score, and some of the components that he talks about for those who have yet to come to the United States are valuable, even for those who are just getting here, or who are already here. So I think today's panel and our discussion will be lively. It'll be informative, and certainly anyone that is part of our webinar today will certainly appreciate the information that we're about to share. So welcome, Dianne, and welcome, Bruce, for today's panel. Delighted to have you both here.
Thank you so much, Kyle. It's a pleasure to be here once again with this Coming to America series, which, as you know, we've heard people are finding incredibly valuable. So thank you for having us.
Yes, from my side, thank you very much.
So today's agenda, to talk a little bit about EB-5, we're gonna discuss what the EB-5 precepts are. CMB, that's what we do. Why we're in business is to help folks come to the United States. And through the EB-5 program, that's our core competency. That's what we were established to do many years ago. And we'll talk, Diane's going to share her expertise on things to think about before you get here, so you don't have to worry about them when you arrive. And then again, Bruce is going to share his expertise on building a credit score while you're not in the United States and how to go about doing that. So let's get started. We've got a lot of territory to cover, a lot of good information to share with you today. For those of you who are already here, you're probably familiar with EB-5, but there may be some folks who joined us, or there may be some family members who have been invited along. We always encourage our participants to invite family members or friends who might be interested in EB-5 to join us for these webinars. So let me quickly go through what is EB-5, some discussion about the program, and what's current in a current offering from CMB. Simply, the EB-5 program was established by the Immigration Act of 1990s. It's administered back then by the Immigration and Naturalization Service, the INS, and now it's administered by the current United States Citizenship and Immigration Services, the USCIS. The idea was to use foreign investment to create jobs here in the United States. If the participants in the program would create the required jobs and invest the required amount, then they would be permitted to have a permanent residence card, a green card, to enter and live permanently in the United States. So at its core, the EB-5 program is actually a jobs creation program with an immigration benefit. Now, the investment amounts back then when the program was originally authored was a $1 million minimum investment. A few years later, they rewrote they added the fact what regional centers portion of it. And that is now the biggest portion of the EB-5 investment is through a regional center. CMB happens to be a regional center. They also made a distinction when they wrote the law initially was where the investment took place. If the investment took place anywhere in the United States at the corner of a busy street in a major metropolitan area, the minimum investment was $1 million. But remember, it's a jobs creation program. So if the investment took place in what's known as a targeted employment area, an area that is in the countryside, a rural designation, or a high unemployment region or community of the United States, it reduced the minimum investment amount from 1 million back then to 500,000. Well, as of November of 2019, the investment amount went from the originally established $1 million to a new higher level of $1.8 million. The reduced investment amount in a targeted employment area, either a rural designation or in the high unemployment, that is now 900,000. So the minimum investment is now 900,000 within EB-5. The requirement to create jobs still exists. There is still a requirement for every participant to demonstrate that they've created at least 10 jobs for American workers as a result of their investment. Now in the category, there's 10,000 visas allocated in the EB-5 category each year. Those 10,000 visas are not 10,000 applications, but 10,000 individual visas. So for example, in a family of 4, Mama would get a visa, Papa would get a visa, and then the 2 children would also have take up their own visas. So that would be 1 application and 4 visas. So when you do the computation, about 2,500 to maybe 3,000 applications can come in under that 10,000 visa allocation in the EB-5 category each year. The EB-5 timeline goes something like this. It starts, as you can see on the left-hand side of the screen, with the filing of what's known as the I-526 petition. That's the initial qualifying petition. The USCIS evaluates that petition and adjudicates it, and the processing times vary. You can find what the current processing predictions are on the USCIS.gov website. But the processing, once that is adjudicated and approved, then it allows the investor, the participant, or to continue to go through the rest of the program. So the initial qualifying petitions, the I-526, the USCIS adjudicates that. Once it's approved, then they move to the next stage, which is a consulate interview. At the consulate interview, they actually obtain the visa, put the visa in the passport, and that visa is not the green card. The visa is permission to enter the United States with immigrant intent. From that stage, they go to actually entering the United States. Once they enter the United States, that's when the conditional green card is issued. That conditional green card period is for a period of 2 years of conditional residency. And at the next stage is 90 days before the conclusion of that 2 years of conditional residency to file the second required petition in the EB-5 process. That's known as the I-829 petition. That I-829 petition is one that requests that the USCIS remove any conditions on the green card and make it permanent. And to do that, then the participant has to show that they've invested the requisite amount of money, they've sustained that investment throughout the period of conditional residency, and that they have created the required number of jobs as a result of that investment. The USCIS then, once that petition is filed, the USCIS processes it. And once it has been processed and approved, any conditions on the green card are removed and the green card is made permanent. There's also an option farther out after 5 years of conditional residency, or after 5 years after entering the United States, the participants may apply for citizenship. And again, that's an option. So that in a nutshell is the very brief description of what EB-5 is, the purpose behind EB-5, why the United States wrote the EB-5 program and legislated it, and the steps in the process to get to the permanent residence card and without conditions. So now let me talk a little bit about COVID. We are in a situation where the EB-5 program requires an investment, and the COVID has impacted nearly every business on the planet. So one of the things I wanted to talk about were the project types that are showing difficulty in EB-5 during COVID. And it doesn't have to be an EB-5, it can actually be anywhere in the world. The types that are showing difficulty are those that have office space, multi-purpose developments that have retail space that are part of the underlying factors. Anything with hospitality, that hotels and the hospitality industry, as you can well imagine, have been impacted negatively almost universally. Luxury condominiums and some of those that are marketing to a very small segment of the population, those are also have had difficulty in those real estate type projects. But there are some types of projects that do have a positive bent, and it's been amazing that CMB has participated in some of those. Projects with income stability. Now, income stability are those long-term leases that we oftentimes hear about, those that are established businesses that have been there for a long time. Maybe they have a long-term lease, and there are long-term tenants in place without the idea that they are going to need to replace that tenant anytime soon. That provides lower exposure and to those other market variables. And it also has some idea that when we talk about what's the life of that term, looking down the road, is there opportunity for that term or the lease or that foundational income to continue to escalate and to continue to grow as the time goes on? So those projects with income stability, that's number one. Number two is criticality of the operations. And this is vitally important. With COVID happening around the world, everyone understands that the shopping has gone from brick and mortar right now to online shopping. Online shopping has exploded in its growth and exponentially grown 5 times, or actually grown 5 years in a short amount of months by the predictions made that I've seen online. So what we've seen is a dramatic change in supply chain and in retail and in consumer shopping. So the business operations that are with logistics and logistics assets are critical to our new economy and the economy under COVID. And so those are the types of projects that people are looking for, good quality projects to invest in, those with income stability and operation criticality. And we're about to show you those as we move forward with CMB's current offerings. Now, CMB, we go back to 1997 when we were originally authorized as a regional center, back when the INS was still in business, the Immigration and Naturalization Service. From that point, we've grown to more than 5,700 investors. We have 4,900 of those investors have that initial qualifying petition approved, the I-526, the I-829 stage, and remember that's at the other end of that timeline. We have 1,400 investors with I-829 petition approvals, and then there are 1,700 investors who have already seen a return of capital from their initial investment amount in EB-5. CMB, throughout our history, has created more than 185,000 jobs with our investments throughout the United States in targeted employment areas. And we have raised more than $3 billion in EB-5 capital. Fully subscribed projects totaled 74. We're one of the busiest, most active regional centers in the industry. And on top of that, we continue to have a 100% success rate at the I-924. That's the I-526 and the I-829 stages. So at each stage of the process, CMB's projects have continued to be approved by the USCIS without fail. Part of the reason that CMB has continued to have so much success is we understand what it takes and what the investors want with their EB5 investment. First of all is to get a green card for themselves and their family. Second of all is the return of the EB5 investment to hopefully at some point in the future see a return of their investment amount. And then third is a far distant third goal in an EB5 investment, and that's a return on the investment. Earn a little something along the way if they can get it. But the savvy EB5 investors will never chase after a higher rate of return if it means more risk on getting their green card or more risk on seeing that they see a return of their capital. Most investors in EB5 are risk adverse. They want as little amount of risk as is possible. So a higher rate of return typically means a higher rate of risk on those other two components. And so the savvy EB5 investor never chases after a higher rate of return if it means more risk elsewhere. CMB is structured. We have more than 50 staff members in our operations around the world. We speak some 15 different languages, and we have investors from 102 different countries from around the globe. That means that at any time during the day or night, we have the capability to speak to someone, usually in their own time zone, and we can speak their language. Besides the 15 different languages, we also are able to speak many different dialects from the different regions around the world. We are ready, poised, and able to answer any questions that you have at the time that you need to answer them 24 hours a day. We're ready to serve you. So that brings us to our current EB5 offerings from CMB. We talked about the style and the type of investment offerings in EB5 that are seemingly to be a good idea during a COVID pandemic, certainly unforeseen. But these are logistics facilities. The first one that I would want to show to you is CMB Group 75. This one happens to be in the north central United States in Detroit, right next to the Canadian border, Windsor, Canada. This particular project is $26.1 million to develop a logistics facility for a Fortune 500 e-commerce retailer, a leader in e-commerce in the United States and around the world. 26.1 million EB5 have been authorized to be raised by Hillwood Development Company by the Group 75 partnership. There's up to 29 units available in that particular partnership. The next project is CMB Group 78. And yes, both of these projects are presently open and subscribing for investors. This one happens to be in Southern California. It's the development of 2 build-to-suit industrial logistics facilities. Yes, industrial logistics again. And this one is raising up to 72.9 EB5, up to 81 available units. That one will modify in a little bit. The amount of raise will be a little bit lower. We've been authorized to raise up to 72.9, but that raise will be capped, and that information will be forthcoming in the next few days. The CMB Group 78 is also open and available for subscription. So if you're interested in industrial logistics, if you're looking for an investment in EB5, we've got them, and they're open and available for subscription. We are partnering again with Hillwood Development Company. Hillwood Development was founded by Ross Perot Jr., Ross Perot Sr., as many of you know, ran for president of the United States in 1992 and 1996. He was not elected as president, but he did change the face of American politics. He founded Perot Systems in 1988, sold that to Dell in 2009, and Electronic Data Systems, EDS, he founded in 1962, which he later sold to GM in 1984. So an amazing story for the Perot family. They are owners of the Hillwood Development Company, and we partnered with Hillwood for 31 different projects in our history. And Hillwood's footprint includes experience in 59 markets, 27 states. They are a global company with a multi-billion-dollar footprint with more than 30 years of development experience in logistics, in planned communities, in many different aspects in the development of experience that Hillwood and the Perot family has. We are excited to partner with them again for these two partnerships, CMB Group 78 and CMB Group 75. CMB and Hillwood have partnered for 31 partnerships. 14 of those partnerships have seen loan repayment of loans. We have 25 different partnerships that have already seen approval by the USCIS, and 5 of the partnerships have I-829, that permanent green card approval for investors in those partnerships. So with the growing demand in industrial logistics, CMB is on a 100% project approval rate, a hugely successful developer and long-term relationship with CMB and Hillwood, and the fact that these projects qualify at the lower investment amount. This Group 75 and Group 78 are terrific projects for you to consider if you're looking at EB5 and an EB5 investment. Okay, thank you very much for that. And so now I'd like to turn the rest of my time to Miss Dianne. And Dianne will talk about steps to success and living in America. I always have something to learn from Dianne. We've shared our time together on several of these Coming to America series, your steps to EB5 success. And I always learn something from you, Dianne. You've always got something new and something important to share. So thank you again for being here, and I turn it over to you.
Sorry, I thought I was. I'm sorry. It's my pleasure to be here today, Kyle. Thank you so much for having me today, and welcome to everybody who is watching around the world. Yes, my objective is to move folks successfully to the United States with the least possible trauma, the least possible hassle. And so my talk very briefly today will be divided into 3 sections. The first is preparing for your new life in the United States. And then when you actually arrive on American soil with your family. And then the third part will be living in the United States, what I recommend that you take notes of while you live in the United States. So let's move on to the first section of preparing for your new life in the United States. Very important piece is to decide where to live. This is a crucial part of your successful life in America. And we help our clients decide what the best location is for them. And there are a number of different things that we consider when choosing with you a state or a city that you would like to live in. And these things could include the weather, very important. It could include the economy. It could include the cost of living. It could include your lifestyle, what kind of sporting activities you like to do. It could include a consideration where you have family and friends. It could include where you want to invest in a business, or even where you have been offered a job. So those are the important things to consider when you decide where to live. And we have such an incredible variety. The United States has 50 different states, and sometimes people call them 50 different countries because they all have different culture, they all have different feel, they all have a different kind of lifestyle. And so that is very important when deciding where to live. Second most important thing that you need to do to prepare is to open a bank account. And Bruce Stewart, who has joined us here today, will talk about that in detail. Very important that you start moving money into a bank account in the United States so that you can prepare for your future life here. Most important, next step is to purchase a property. And Bruce, as I said, will go into much greater detail on this in his presentation, but very important, and he'll explain why this is so important, is to actually purchase a property in the United States. So there are many things that you can do with the Pathway service, and we literally roll out the red carpet for you so that you don't have to worry about all the little minute things that are going to crop up when you start on this journey. Kai, can we move on to the next slide? When you arrive in America, there are a few things that you really have to do, because without them, your life will be complicated and it'll be difficult to function. So the most important thing that you do is to get a driver's license as soon as you can. And what Pathway does is that we prepare you while you are still outside the United States, and we give you a link online of your particular state's DMV, which is the Department of Motor Vehicles, and you can then prepare yourself for that driving test. and you can do it before you even get here. So once you arrive, within the first week, we advise our clients to go right away to the DMV, make an appointment, and to sit your test. You will also be required to do an actual physical driving test. And so we can prepare you for that as well and give you tips of what the inspectors will be looking for. The next most important thing is to get your social security number. Now, quite often, once you've been through what Kai spoke about, the consulate interview, they will tell you at that interview that they will request the Social Security to issue a number for you. But it is our experience that it is very valuable to go down to your local Social Security office and make sure that your application is in process, because this can take a number of weeks. And you want to have that number as soon as possible because you need that number for many different applications. And Bruce will go into that in detail as well in his presentation. Then the third most important thing is you start immediately developing your personal and your professional network. You start meeting people, you start getting out there and talking to folks. Now, I know that that is probably difficult now in the COVID period, but hopefully we will have a vaccine soon and our in-person meetings and activities in the United States will be able to resume quickly. But I urge you to do that. There are lots of opportunities at the moment to network with personal and professional organizations on Zoom. I do a lot of Zoom networking groups still to this day. Even though I've been in the United States for 20 years, I still love to keep in touch with people and to grow my network even bigger and bigger. So it's very important that you do these 3 steps as soon as you arrive. Now, there are lots of other things that you do need to do as well, but I'm just focusing on these 3 key important things to do within the first couple of weeks that you're here. So moving on to actually living in the United States. Now you have to make your life work. You have to be successful and you have to enjoy the wonderful lifestyle and the American dream that all of us enjoy living here in this beautiful country. You need to build a credit score. I'm not going to talk very much about that because that's the focus of Bruce's presentation. So that's a very important piece and I can't emphasize that enough. The second thing is to establish an income or establish a new business. Many of our EB5 clients that come to the United States have an existing income and they continue to benefit from that income, but they want to expand it into the United States, or they want to invest in a new business that's going to sustain them in the United States. And then the third thing, which is probably one of the most important things, is that I urge you to interact with your fellow Americans. Embrace your neighbors, get to know them, get to know the people in your industry, get to know your co-workers if you're going to be working in an organization, and really start embracing our culture here, which we have fantastic holidays. We have a wonderful holiday coming up, which is my favorite, Thanksgiving, which is an amazing gathering of family and friends. And of course, this year is going to be different, but normally in the last 19 years that we've been celebrating Thanksgiving here in the United States, it's been a wonderful gathering with family and food, and lots of food, a turkey, all the trimmings, and it's a great, great gathering. And it's really unique to the United States in that we gather at this time with family and we celebrate the fact that we have freedom and a wonderful quality of life here in the United States. So I really urge you when you arrive here to start interacting and engaging with the community. So don't hide away, reach out, go and volunteer at your local children's school, establish a circle of American friends, and get to know people around you. And very importantly, ask for help. If you have a question, obviously my clients, I'm the first person that they call when they need something, and we're always here to help them. But if you can't get hold of me or you want some other input, ask for help. Americans are probably one of the most helpful and friendly people on the planet, and they're delighted to give you help at every step of the way. And then, as I said earlier, volunteer and engage with social opportunities, organizations that you feel passionate about. There's an organization for just about every interest in the United States. So whether you love animals, whether you love the arts, whether you're an outdoor person, whether you love hiking, volunteer and engage with those opportunities and take advantage of all those organizations that offer these things. So I think we are done. If you'd like to contact us, we are the red carpet. We roll out the red carpet for you. CMB are the ones that get you the green card. They get you the key to the door. They bring you into the United States, and we take care of you from there on. We also, as I said, take care of you before you arrive here, which is very important. And those 2 years that while you're waiting for your conditional green card to be approved, that's very valuable time. And Bruce will take it from there because he, in fact, will talk about how to use those 2 hours extremely valuably. So thank you so much, Kai. I'm going to hand back to you.
Thank you, Dianne. Always a pleasure. For those of you that haven't taken the opportunity to reach out to Dianne, if you have any needs, whatever, please do. Take advantage of the fact that she's here and she's a resource for you. And she has a lot of feelers and tentacles out in places that maybe you hadn't thought about, so that she can get you an answer. She can maybe find an answer. I'll share with you a story, a success story with Dianne. There was a client, a limited partner of CMB, who was having some challenges getting some documents. And we reached out to Dianne, said, hey, Dianne, who do you know? What do you know? And she put the gears in motion and was able to reach out and at least get the ball rolling for that particular client so that those documents could be obtained. So don't think that you're not talking to the expert, because you are. We've introduced Dianne, and so please take advantage of, if you've got a need and you've got a question, reach out, and she'll be there to take your call and discuss what your needs are and how she can help.
Thank you so much, Kai. I'd be delighted to answer any questions that people might have.
Thank you again. So now we're going to pivot a little bit and talk to Dr. Bruce. And Dr. Bruce, as you heard Andrew, try to read through his bio. This is a well-traveled, well-experienced person who has done many things in his short days here on Earth. He's become a valuable resource, not only for our country and our government, but for governments around the world, and anyone that comes in contact with Bruce typically walks away with the understanding that, geez, they've just met someone special. And so it's an opportunity to share with you today, Dr. Bruce Stewart and his presentation on the importance behind building a credit score. So Dr. Bruce, welcome. Thank you for being part of today's discussion, and thank you for taking the time to share your expertise today.
Thanks very much, Dianne. It's a pleasure to be here. The whole credit score issue is very close to my heart.
Excuse me, just a second. Kai, could you mute possibly? Oh, we're getting some echo here.
That sounds a whole lot better.
Perfect. Thank you.
Okay. Very close to my heart, this whole issue of credit score. When we did this move 20 years ago, we didn't have the advice that is available today. And we sort of brought our ethics that we had in South Africa, where everybody tends to pay cash for everything. We brought that here and thought, well, we're going to be great people because we pay cash for everything. We realized that was one of the biggest mistakes we could possibly make. To function in the United States, there are 2 essential things that you need. If you can just go to the next slide, please. You've got to have the social security number. That tells us that you can be here, that you can function here. Without a social security number, you are essentially just a tourist. You're passing through and you're paying cash for everything, but you don't actually belong. And the only way you're going to get a social security number is, first of all, your birthright will give you that social security number, or if you have an immigrant green card, or if you have a non-immigrant employment-based visa. But that basically gives you the social security number, but it doesn't give you a credit score. And this is where the important thing comes in, because in the United States, you never pay cash for anything, and a good credit score is absolutely essential. Without the credit score, as I say, you're a tourist, you're just passing through, you're paying cash, and nobody's going to pay any attention to you. These are the sort of letters that we get on a regular basis. And in fact, this mirrors our own experience. We came here, we had the social security number, and as Helen out in Utah said, she's finding it incredibly difficult to do anything other than open a bank account, operates on a credit scoring system that is different from other places. And in fact, I haven't come across any country in the world that places as much importance on a credit score and a credit history as we do in the United States. A lot of places, they won't even accept cash, because really the credit score, if we go to the next slide, the credit score is an indication of your character. When lenders are going to give you money, they want to know, regardless of how much money, you can be super, super rich and be able to pay cash for everything. But the lender wants to know that you're fiscally responsible and that the chances of them not being paid are extremely remote. And your credit score is really an indication of how reliable you are and whether lenders can lend you some money and know that you will repay on time and in full. I grew up in an environment where, yeah, you had to pay a payment on a credit card. Well, this week or next week will be fine. That doesn't apply in the United States. If you owe $10 on a credit card and it's due on the 15th of the month, it doesn't mean you pay on the 16th of the month. You pay on or before the 15th. Otherwise, they will feel that you're an unreliable, irresponsible person. That gets reported on your credit score, and everybody thereafter can see, okay, here's somebody who's a little bit on the dodgy side. So that's really, it's a character issue. To get this good credit score, it's going to make everything a whole lot less expensive. I'll touch a little bit later on the type of things that they use in this country where they do have a look at your credit score, but having a good credit score makes everything a whole lot less expensive and a whole lot easier to get. And of course, the opposite. If you've got a bad credit score, it's going to make everything a whole lot more expensive and a whole lot more difficult to get. There are three credit reporting agencies: TransUnion, Experian, and Equifax. I've seen some other countries around the world that are using these companies for their reporting agencies. They all have different algorithms, and they all report on at different times of the month. Most of them start reporting on your financial status in terms of your debt around about the 20th of the month. And one of the tips is that bring your balances of things like credit cards and scorecards, bring those down before the 20th of the month, because one of the things that they're also looking at is how much credit have you been given and what is your credit utilization. If you're maxing out your credit cards, that's going to nail you at the end of the month. So you want to bring those balances down during the period of the month, because otherwise these three agencies are going to show that you're using far too much of your credit. And obviously that shows that you are more of a risk. Now, they look at credit score in terms of this credit score scale, and I've put the numbers in here. If you're below 300, well, they're going to ask you to pay cash before you order your cup of coffee, because they're not even going to give you coffee because your credit score is so bad. And this is really, really serious. You're in a bad predicament. Gradually, you will work up where you're in the 300 to the 629, and pretty much you're a poor risk for anybody. 630 to 689, you're fair. What you want to do is you want to get yourself up into the 700s, close to 700, 690 to 719, you're good. And of course, if you're in the 720 to 850 situation, they are going to pour largesse onto you. And it's sort of a little bit of a dichotomy that we've got with credit scores is, if you've got a low credit score, you really do need the credit, but nobody's going to give it to you. If you're up in the 700s, you probably don't need the credit, but you're going to get an envelope in the mail pretty much every day saying, you know, we've upped your credit limit and we're offering you a new card. And if you transfer your balance here, we'll give you 18 months of no interest and minimal repayments. So once you hit that 720 mark, you know, you're in heaven. The problem is that when you get here in the United States, you've got no credit. And this is where they're going to start using your credit score. You want to buy a home, they're going to pull your credit. And if you haven't got at least a 720 credit score, you're either not going to get a mortgage or you're going to pay premium top dollar in interest rate. If you've already got a mortgage and you want to get refinanced or get a better rate on this or on credit cards, once again, they're going to pull your credit score. Because remember, this is all about your character, not about how much money you've got. So you can have somebody, for example, who is supremely wealthy and he's retired. He's got no income and he probably pays cash for everything. So he's got no credit score. We had a situation where father was extremely wealthy. Daughter was a trust fund child. So neither of them really had to worry about working. Daughter wanted to sign a lease on an apartment. She didn't have a credit score. So the agent said, well, can your dad sign surety? So daddy goes down and they pull his credit score. And of course, he doesn't have a credit score either because he's a cash payer, because he's not working anymore. He's retired. He was probably in a position to purchase the entire building, but he didn't have a credit score, and therefore getting a lease on that apartment was just simply not possible. They also look at your credit score when it comes to getting a job or even keeping a job. If you go and apply for a position in a bank, for example, or where you're going to be dealing with money or with budgets, they're going to pull your credit score. Because if you've got a bad credit score, they're basically saying, well, you can't even keep your own house in order. How can we trust you to be in charge of anything financial in terms of companies? So credit score, once again, it's a character thing. Renting an apartment, I've mentioned, purchasing a car, they'll pull your credit score immediately. And they want to know that they are going to be paid every single month, and they'll get paid on time. Refinancing loans. My personal experience, getting a cell phone. I went into a cell phone store shortly after we got here, and the guy told me about this is the phone and this is the package and these are the plans and these were all of the extras. And I said, fantastic. And he said, oh, by the way, can I have your social number? I said, well, what for? And he said, I need to pull your credit score. Well, when he pulled my credit score, he came back and he said, well, I'm terribly sorry, but I can't offer you all of these extra frills. And I'm going to need 2 years of the cell phone contract put down as a deposit before we get the cell phone. So once again, that was my budget of cash for other things that was now going to go down onto a cell phone, simply because I didn't have this good credit score. Utilities, the amount of deposit that you're going to put down on lights, water, gas, television, internet, all of these utilities, if your credit score is bad, you're going to put down top dollar in terms of big deposits. Insurance, the same thing is going to apply. So the credit score impacts so many different facets of your life, just makes life difficult and a whole lot more expensive. Now, in terms of the composition of your credit score, you'll see down at the bottom, your payment history is 35% of that score. It's the biggest single item in terms of it. It's a religion with you that if you are due to make a payment on a particular day of the month, you are not 1 day late. Now, a little warning on this one is that they tend to close their books on that final day. Some of them close their books at midnight. So as long as you make your payment before midnight, you're still on time. Others will close their payment at 8 o'clock at night. Some of them close their payments at close of business, 5, 6 o'clock at night. So if your payment was due before 6 p.m. and you paid at 6:05 p.m., it's a late payment. It will incur a cost, sometimes anything between $25 and $35 for a late payment. Even if your payment was only $10, you're still going to pick up that late payment fee. So it's holy, you're religious, you do not budge on this one. Your payment history is absolutely essential. Then your credit utilization. They don't want to know that, they don't want to see that you're maxed out, that you're tapping out all of your credit cards and all of your loans. So, and that's one of the services that we do is advising you of what the cap is on different loans, that you never exceed that amount. So credit utilization, or keeping that as low as possible, is great. The fact that you might have a $3,000 limit on your credit card doesn't mean that you're going to max out your credit card at $3,000. It's going to hit you on your score. The 15% years of credit is the one that impacts most immigrants. Remember, the average American is starting to build his credit history from the age of 18. Now, I came to this country in my more senior years, so I'm losing that 15% right from the get-go because my current age, they're looking at me and they're saying, well, you've only had a credit history of 20 years. Well, I should have a credit history of 40 years. So they're penalizing me every single time, just that my credit history is not as long as most other Americans. We can't do anything about that. So we've got to try to make it up on somewhere else. New credit, obviously, if somebody is giving you new credit, it shows that somebody else trusts you. So somebody else finds that you have a good financial character. So yes, that can improve your credit score by periodically getting new lines of credit, but you don't go out and just apply for half a dozen credit cards and half a dozen store cards, because that will count against you if you're overutilizing new credit. And then your credit mix, they don't want to see that you're tied up in one particular type of loan. And I'll talk about that when we get to the 1, 2, 3 reel. Go to the next. So here's your credit, you're building your credit score, this 1, 2, 3 rule. The perfect way of building credit is to have at least one mortgage. And this is one of the 3 legs of the tripod. It's probably the most important one because it really leads into everything else. Secondly, you want to have at least 2 installment loans. So this is, for example, a car lease where it's a fixed period, fixed payment. But you're not going to get those unless you've got a credit score. So it's one of these things that you've got to get a credit score to get credit, but you can't get credit unless you've got the credit score. And the third one is 3 revolving credit lines. So this could be your credit cards and your store cards where you're continually paying these things over. Now, that is the perfect mix. And if you've got those, the 1, 2, 3 rule in place, you pick up those extra percentage points in terms of building your credit score. 1 mortgage, 2 installment loans, and 3 credit cards. The credit paradox, which obviously everybody says, you know, you need to have debt in order to get credit, but you've got to have credit in order to get debt. And that's the paradox that we got stuck in, and we had to figure out how to solve the problem. Because when I came to this country, couldn't get a credit card because I didn't have a credit score, but I needed the credit card in order to get the credit score. So the solution was to start looking at what we can do before you actually get to the United States. You've got a credit history and a credit score in your home country. And we can use that through the Foreign National Property Investor Program, the FNPIP, where we can use foreign credit in order to start building the foundation of a credit score in the United States, and that is to get a US mortgage on a piece of property. Next slide. So what the Foreign National Property Investor Program does is essentially you will buy an investment home. Now, this was designed for investment homes stroke second homes. It's not for a principal resident, because your principal residence is obviously in your home country. But you're going to be asked to put down a 35% down payment. And then we will assist you in getting a US mortgage based upon your foreign credit history. And once you've purchased that piece of property, you can then rent it out to a US tenant until you are ready to take occupancy or sell the property. Now, the important thing here is it is an investment home. So you can't buy the thing today and then move into it. Pretty much for at least 1 year after you've purchased that piece of property, you can't move into it. You're not supposed to move into it because then essentially it was no longer an investment property. Second home, it can't be your principal residence. So you need to do this while you are still domiciled overseas and you still have a principal, a primary home sitting overseas. But that's basically what it is. And what this is going to do is you've now got a US mortgage and you've got a tenant in the property, and every month that tenant is paying the rental into your US bank account. And that's why having a US bank account is so important. And of course, every month through debit order, automatically your mortgage payment is paid out. So that mortgage bank account is now building up a record. It's got debits and credits coming in every single month, but it's sort of floating because it's not linked to a social security number, but it is there. Once you come into the country on your EB-5 with CMB, or whether you come in on an employment-based non-immigrant visa, once you get into the country and you've now got your social security number, we link that social number to that mortgage account. and that mortgage account now becomes yours, and the entire history of that mortgage account is going to become yours, and it applies retroactively. So even though your feet are still wet and you've only just walked into the United States, the moment you get your social security number and you pick up the benefits of that account, as far as your credit history is concerned, you've been here for 2 years or for as long as you've had that mortgage. So that's one of the major reasons. And it's the only line of credit that you can actually start working now, and it's going to apply retroactively. It's a dollar investment now, especially in countries which have high fluctuation with currencies. It's a nice stable investment. It's being paid for by a US tenant. I've given you examples of North and South Carolina, where the annual property market is sitting at between 6 and 8%. In fact, this year so far, we've seen a 16% increase in listing prices. And also you're looking for an area which has got high demand for rentals. Now, since the crash of 2008, there's been an incredible shortage of properties. So people are holding on to their properties as much as they can. Because they tightened up the regulations in terms of getting mortgages, there is huge demand for rental properties in some parts of the United States. In fact, in most parts of the US, there's massive demand. And that's what you're looking for, is you're looking for a market where there's tremendous demand for rentals. If you wait until you get here, you're not going to qualify for a mortgage. Remember, you're going to walk in here with no credit score. So you're not going to get a mortgage, and you're going to have to rent a home for at least 2 years. The mortgage companies will want to see 2 tax cycles. You pay tax on an annual basis. They're going to want to see 2 annual tax returns. So for 2 years, you're going to be paying cash for a house, or you're going to be renting a house. And paying cash is a bad idea for just so many reasons. First of all, paying cash for something doesn't do anything for your credit score. So you lose out on the benefit of building credit score. Secondly, rentals these days, because so many people are wanting to rent, rentals are higher than your mortgage payments. So you can buy a house for cheaper than you can rent it. And the most important one is purely a financial one, is if you're renting a property, you're earning your income, paying your tax, and then paying your rentals with after-tax dollars. Whereas if you get a mortgage, the mortgage interest is generally going to be tax deductible. You talk to your financial people about that, but generally your mortgage interest, you're going to find that that's going to be tax deductible. So there are huge advantages. Here's an example now. If your house that you're intending to buy is about $350,000, you're going to be putting down a 35% deposit. And rule of thumb, closing costs, that's all the legal fees and the transfer fees and the title deed registration fees and the inspections and so forth, it's going to run you about 4%. So on that $350,000, your out of pocket is going to be $136,500. If we take an average 5% growth in the property value, it means that this $350,000 house has increased in value by 5% each year, which is essentially going to give you almost a 13% return on your out-of-pocket investment of $136,500. Because remember, once you've purchased the home and you've put a tenant in there, the rental tenant is going to be paying PITI, which is principal, interest, taxes, and insurance. And I'll talk about that in the next slide, but there's really zero cost for you. You put down your deposit and your closing costs, and thereafter, you don't need to worry about anything. So PITI, it's something that is unique in the United States. Normally around the world, you make a payment to the mortgage company every month, which is the principal, the capital repayment, and the interest. That's a separate payment. And then part of your utility bills, or as a separate invoice, you're going to be paying property taxes. Some countries call them assessment rates. You would be paying those directly to the city council or the municipality, and then you'd be paying your insurance directly to the insurance company. What we do in the United States is you make a single payment to the mortgage company. They will take off the principal and the interest, and then the amount that you've paid each month, the 1/12 of your annual taxes, you pay that to the mortgage company, and your 1/12 of the insurance policy. And the mortgage company puts that into an escrow account, sort of a savings account, and they hold that money for you. And at the end of the year, the city council will send the assessment rates, the property tax bill. They will send that to the mortgage company and they will pay that on your behalf. Similarly, the insurance company is going to send the bill to the mortgage company and they'll pay that. The reason why they've done it is, first of all, you just have a single payment to make each month. You don't have this balloon payment at the end of the year to pay whatever the amount of the assessment rates or property taxes are. But there's a more practical reason. Is, remember, the property is the insurance that the mortgage company has got, that they've got insurance for their loan. If, for example, the house burns down, it's a little bit too late for them to find out that you haven't been paying your insurance premiums, or if they have to repo the house for any reason whatsoever, they don't want to suddenly find out that there are a whole lot of property taxes or assessment rates that are in arrears. But the nice thing about it is it's a single payment, so you can budget for this. And because of the fairly high deposit that you're putting down and the fact that there's huge demand for rental properties, your tenant is probably going to give you a little bit of positive cash flow, that they will pay the PITI payment. It's the full amount, principal, interest, taxes, and insurance. And you're going to have zero out of pocket each month. That's the biggest advantage of it. Here's an example of the sort of prices that you're looking at. Obviously, they will vary by city. These are some examples from Charlotte, North Carolina. You'll see with something like, a $230,000 house, great homes. They are beautiful inside. Somebody once said that the perfect world is to, I think, marry a South African, drive a German car, and live in an American home. They are just exquisite. But really the big difference between those two properties is obviously square footage. The fascia, the one has got a siding fascia to it, the other one has got a face brick fascia to it. But those are the sort of prices that you are looking at in terms of properties. But, you could go to Los Angeles or New York, and those numbers would probably buy you no more than a broom closet. But that's the one thing that you've got to look at. So the first step of this property investment program is get your US personal bank account open. Now, until very recently, all of the banks actually required that you come into the bank account personally to come and do this for you. Obviously, COVID has put the kiss of death on that one. So we spent some time talking to various banks. Most of them said, no, we want to see you personally, but we eventually found an FDIC, that's a Federal Deposit Insurance Company. It's a commercial bank, and we can open up accounts for you at that bank and facilitate that. So you, without having to come to the United States, we can get that account open. The reason why you want that done is because you need to start funding the account. Any funds that you use to purchase property, they must seed in that account for a minimum of 30 days. So if you wanting to buy a piece of property and you've got to put down some earnest money and they're asking you for a check, if the money hasn't been in your bank account for 30 days, you can't use it in a property transaction. The reason I say preferably for 90 days is because if the funds in that account are there for less than 90 days, they want to know where the money came from. Is it legit money? Is it honest money? Is it money that has been taxed? So to avoid the inquiry as to where you got the money from, you can't, for example, borrow money in order to buy a house. You can't borrow from your mother or your father or your friends. They want to know that that is your money. If it's been in your US bank account for at least 90 days, then they're not interested in where it came from. Then it's legit. And that's why, to avoid the paperwork of source of funds, we say, put it in, keep it in for 90 days. Takes away all the hassle out of it. Next slide, please. Then have a Zoom or a WhatsApp meeting with a property realtor who's going to establish what sort of a property you're looking at, where you want to go to, what your budget is going to be. With internet these days, you actually don't need to be here to do this, because the portals that they have for properties are phenomenal, and your investment, your property realtor will find out what sort of price bracket you're looking at, what sort of budget you're looking for, and open up a portal so you can start viewing those properties. So your first step is to get an FMPIP realtor. Then to get an FMPIP mortgage broker who's going to start the process of pre-qualifying. Remember, there is a massive shortage of properties in most cities in the United States. A lot of more people are working from home. There's big demand on this. If you can go into finding a piece of property and you've already been pre-qualified, it puts you at the head of the line with somebody else who says, well, you know, I still have to apply for a mortgage. That's why you see the mortgage broker first, and they pre-qualify you. Then purchase your investment property. If you can come to the United States to do this, yeah, that's great. But if it can't be done for whatever reasons, you can purchase that property remotely. Next slide. Remember, and this is a critical one, this is primarily an investment that you're doing, not necessarily your future home. It's a business decision. If you're buying stocks on the stock exchange, you don't actually need to go out and see the stock, see the share, have a look at the company. You take the advice of your investment advisor. It shouldn't be an emotional thing. Obviously, a lot of people who come into the United States, they would like to sort of kill two birds with one stone. Find a house that is a good investment for me to use to buy into now, but also the sort of place that I would feel comfortable living in once I get here. If you can achieve that, that's fine. But remember, if it's a really good investment, buy the thing, you have the house for the year or 2 years waiting until you get your green card and you move to the United States, then make the decision. Do I want to keep the property? In which case, keep it as a rental and keep the tenants in there, or sell the thing and go find what you want. The main thing is it is an investment, and that should be your primary decision. If you can find something that pulls at the heartstrings, that's fine. Remember, as I mentioned earlier, during those years between purchasing the property and coming to the United States, your mortgage is establishing a credit history. Once you've got a social security number and this is connected to your mortgage, the account history is yours and it's retroactive to the time that you opened the mortgage. Here's a case study. Client of ours purchased an investment property back in 2017, got a tenant for 2 years. In fact, the property went on the market on a Sunday morning, and by Sunday afternoon, they already had a tenant secured. There was no price negotiation on the rental. The tenant paid exactly what the PITI, principal, interest, taxes, and insurance cost was. They paid that. When their client arrived 2 years later and linked her social security number to the mortgage history, her credit score, instead of starting in the sub 300 mark, bounced up to 700 because she had, and it was a big property. It was a $650,000, $700,000 property. So it was premium property, and the tenant had been really good about paying on time, and she had been very good about paying her mortgage on time. There was a solid 2-year history. So her credit score bounced up to 700. Now with 700, you and obviously proof of income, because that's the important thing. They want to know that you're actually earning. The client could go out immediately and get a vehicle lease installment line of credit, and also go down to the local bank and get a revolving credit, which was a credit card. And within 6 months of arriving in the United States, her credit score, because it was now supported with a 2-year mortgage and a 6-month car lease and a 6-month credit card, her score was up at about 750. And a year after arriving in the United States, her property had increased in value by 16%, just over 5% per annum over the 3 years that she had the property. And with nice 16% growth and her credit history and credit score, she was able to refinance the mortgage to a lower rate of 3%, which is what the refinance rate is at the moment. So 3 years after buying the property and a year after getting here, she was down at 3% and she'd shown nice appreciable growth. When I compared that with my situation, I didn't know these things. So we rented for the first 2 years, thinking that it would be a good idea to rent and keep ourselves flexible. We realized for 2 years we weren't doing anything about our credit score, and we couldn't even get a credit score because nobody would even give us a credit card. The only way that I solved that is I actually went down to the local bank manager and I said, listen, help. And as Di says, when you ask Americans for help, generally they will reach out and do something for you. But, you know, we made so many mistakes simply because we didn't know about this foreign national investment program. So it's all about character. If you don't start building your credit score now, you're just going to find life becomes just that much more difficult further down the road. Hope you found this of interest. Thank you very much. Kai, back to you.
Thank you, Bruce. I want to share with you my case study. I went home yesterday and checked in my email, and one of my banking institutions sent me an email saying, hey, read our weekly newsletter. So I clicked into the weekly newsletter, and the feature article was how to improve your credit score. So not only is it vital for those of you who are outside the United States thinking of coming to America, certainly the reason why we're putting this webinar on, and we've got Bruce's expertise as part of it. But for those of you that are already in the United States, they're pointing to, hey, how do you improve that credit score even when you're already here? So with Bruce's testimony and sharing of his expertise and what's happening in the United States, I hope that draws the parallel, just how vital it is. So Bruce, thank you very much. Really incredible.
My pleasure.
So here's some contact information for Dianne and Bruce. Please gather that in. If you haven't yet done that, you can take your camera and take a picture of the screen if you like, so that you can get their information. Also, if you would like, if you haven't got your phone or a pencil handy, or you were interested in an EB5 investment, a current offering from CMB, get in touch with us. We can certainly put you in touch with Dianne and Bruce on any questions, and we'll just forward those on. And if you have any questions on EB5 or the EB5 program, CMB's offerings, please get in touch with that. We've got investor relations managers who can help you and are delighted to help you along with any questions you may have about the EB5 program, CMB, our history of success, or our current offerings. So Andrew, that wraps it up for today, with the exception of the important question and answer. And so I'm going to turn it over to you. I know you've been gathering in questions and predating our webinar today, where you had some that had come in earlier. Thank you to those who are attending today for sending in your questions early. And I know that I saw that there were a few that came in during our presentation. So Andrew, if you would, please.
Thank you very much, Kai, and thank you everyone that's the information from your presentations today have been really valuable. A couple of questions that we have ahead of the event today. Does the size of my mortgage affect my credit score? Would be one to address.
No, it doesn't. The property investor program requires a 35% deposit, but there's nothing to say that you can't put down a 90% deposit and just have a 10% mortgage. So the size of the mortgage doesn't, the existence is important, but the size is not important. All that they're interested to know is that you do pay your mortgage payments on time and when due, and the full amount. You can't pay, if you pay, for example, if your mortgage is $1,000 a month and you pay $900, they will not accept a part payment. It is viewed as a late payment. They'll put that into a rollover account. And the next month when you pay $900, they will take $100 out of that to bring your previous month up. So that's how you get into these traps with mortgages. You pay your full mortgage amount in full when it's due, but they're not interested in how big the mortgage is.
Thank you very much. I have another one here that says, can I buy a commercial property with the FNPIP?
No, it is for a residential home. It's ideally, we refer to that as your second home, but it is only on residential properties, unfortunately.
Thank you very much. Kai, this would be one that's EB5 related. So it's understood that after you arrive in the US, you get a 2-year conditional green card. Processing times currently, though, for the I-829 could be up to 30 months. And your filings are done typically around 90 days before the expiration of your conditional green card. As processing times are up to that 30-month window, what happens to the green card status during that 2-year period if processing times for an I-829 can be up to 30 months?
Good, thank you for the question. And for those who are filing their I-829, automatically the USCIS will extend the status while the I-829 is being processed by 1 year. So each year, while the USCIS is still processing the I-829 petition, the status is automatically extended year to year. And so that's a process that's already in place. You won't have to worry about traveling back to the homeland or being out of status while the I-829 is pending. It's a process where the current visa, the current conditional green card status will be extended by 1 year.
Perfect. Thank you very much. So Bruce or Diane, this will be back to your court here. So who will manage the property before I
Right.
arrive?
Yeah, that's a concern for people that purchase a property and they're not resident in the United States yet. There are a number of different ways you can approach that. Normally, the realtor may take care of the property for you and just keep her eye on it, or you may decide to employ a property manager who would then make sure that the rent was paid every month and that any repairs would be made. And make sure that if anything does go wrong with the property, that they will be done timeously. And so, yes, there are a number of options in order to make sure that you don't have the headache sitting outside of the country with a property that needs attention. So that we have addressed as well.
Great, thank you very much. Kai, we've got a couple questions here. Can I get a bank loan from the USA, or can I use a financing method to apply for EB-5 or qualify for EB-5?
Well, the new understanding is that yes, a bank loan and debt can be used for an EB-5 investment. Again, this is a question that should be pointed directly to an immigration attorney. They are the ones that can guide and counsel you on the source of funds and the appropriate use of the correct funds that for EB-5 purposes. So while we are understanding from court decisions that a loan can be used as part of the EB-5 investment dollars, work with your attorney. Make sure that you are making the right decision and using the appropriate funds that are suitable for EB-5 purposes.
Thank you very much. Here's another one. Can we start working and investing as soon as we enter the USA, or do we need to wait for our social security number to arrive?
I can answer that question. Yes, you can in fact start working immediately. It depends on what position or what job you are applying for. Sometimes a bank would want you to have a social security number, but they are understanding. We have placed a number of our clients in positions, help them with their resumes, which is another one of the services that we offer. Preparing your resume before you get here so that you can apply for a job as soon as possible. But not everybody requires the social number to get employment, but many do. So it just depends on where your job is going to be located and what industry you're in.
Thank you very much. There's a question for Bruce or Diane. Hi, if I already have a mortgage with a commercial bank, how can I know if it is under the FNPIP?
The FNPIP is simply a system of how to get a mortgage. If he's already got a mortgage, he doesn't need to worry about the FNPIP at all.
Yes, correct. The only thing he doesn't have is a social security number yet, if he doesn't have one. If he does, that's fantastic. Then of course his credit score is building in the background. But if he doesn't have a social security number, then once he gets it, it will work retroactively for the existing mortgage that he already has.
Perfect. Thank you very much. It looks like we probably have time for maybe one or two more questions here. So in the interest of time, we'll try to move these along. Can I pay more than a 35% deposit for this investment property?
Absolutely.
And then another follow-up to that, and maybe this would be best separately answered, both from Pathway and also for Kai, because it's not specific one way or the other. How much minimum specifically do I need to invest? So maybe Kai, do you want to start with that from the EB-5 side? And then Bruce and Diane, maybe you can address it to maybe the interest of this property investment.
The regulations for EB-5 require that a Minimum $900,000 investment amount is required, and that investment must take place in what's known as a targeted employment area, TEA. And the targeted employment area qualified by the location, and the location would have to be in an area that is high unemployment, 150% of the national average of unemployment, or in the countryside in a rural designation with a small population and not annexed or adjacent to a metropolitan statistical area. So the minimum investment amount by regulation is 900,000 USD.
My answer, if they're wanting to invest in a property, there is no limit. There's no minimum and there's no maximum. So as long as you have a mortgage that is approved and that is running and that is registered and that is closed, you will build that credit score. So if you want to spend $100,000 on a property or $1 million on a property, excuse me, there's no limit and there's no minimum. But working with your realtor, she will advise where the sweet spot is for a good investment. So that's why we use the $350,000 purchase price, because that can be a sweet spot in a lot of markets around the United States. I hope that answers your question.
Thank you very much. I think that hopefully it does cover both sides. We had another one that came up, and what happens, and this would be maybe for Kai, and of course this is going to likely be mostly focused to an attorney, but what happens if we already have a US visa?
And the question of it depends upon the type of visa. You're right. It would be require an attorney to determine what the visa is, what status you are, whether or not the visa is an immigration-based visa, whether it's a non-immigration-based visa, whether you can transfer or whether you can participate in EB-5 and just merely do a change of status after your I-526 petition has been processed. If you, this one is specific to you, so if you'll give us a call or contact CMB at www.cmbeb5visa.com, we'll be glad to get the question and maybe answer more in depth. I'd be glad to.
Apologize to interrupt, Kai. It looks like they're on an H-1B visa is specifically what they were asking about.
Again, the H-1B means that you've been sponsored by an employer, and EB-5 allows for the investment for H-1B participants. So again, working with an attorney, they can guide you through the visa process. But yes, EB-5 would be available to you to invest alongside your H-1B. You would stay in status on your H-1B and file an I-526 petition in parallel. And then you can merely do a change of status with the I-526 petition approval and a visa available. But again, work with an attorney, and we can answer any questions that you and your attorney might have as far as the project and that type of information that you would need.
Thank you, Kai. One final question, it looks like, and will the tenant income cover all of the mortgage costs?
I'll take a stab at that. Yes. All of our clients that we have put through this Foreign National Investment Program have in fact covered all of their costs. The more expensive the property, the less cushion you're going to have, because obviously there is going to be a top limit as to how much rental you can ask for that property. So that's why we recommend that our clients don't spend a huge amount of money on a purchase price, because it also takes away the number of available tenants that would be in that market. So if you're going to buy $1 million property that you'd like to live in 2 years' time, finding a tenant is going to be that much harder in a market where there are far fewer people that can afford to live in $1 million home. So that would be dependent on how quickly you would like to rent that property out after purchase.
Yes, if I can add in on that one, just anecdotally, remember that you're putting down a 35% deposit. So the mortgage that is being financed is only a 65% of the value of the property. And if your purchase is within that sweet spot, and for Charlotte, for example, we reckon somewhere between 250 and 550. That's where the bulk of them are going to be. You don't want to go much above that because, as Di says, it's going to reduce the market. But remember that the rental is really only there to cover PITI, which is on 65% of the value of the property. So anecdotally, in all of these FNPIT properties, we found that the owner has actually had a slight positive cash flow and have been able to use that for small improvements that they want to do. We haven't got a single case where the owner is having to put money in every month. But that's anecdotally. It really depends on the property, where it's located. And I think this is where taking good advice from the realtor is absolutely essential. The realtor's got to look at that property and say, will this property yield sufficient rental? That's the important thing.
Well, thank you very much, Bruce and Dianne. That is going to conclude our Q&A today. So a sincere thank you from all of us for sharing your time and staying throughout our entire presentation. We hope you found this to be a valuable resource while planning to move to the United States. Feel free to use the contact information on your screen at this time. We will hope to have a video link available if you'd like to watch again or even share with some family and friends. We will be sending that out here in the coming days. You should expect to receive the follow-up email, of course, with that link. Kai, did you have any final thoughts before we wrap up here?
I did. I again wish to thank Bruce and Dianne for their participation and sharing of their knowledge, and also for all of our guests who were part of our presentation today. Thank you for joining us. We certainly enjoy putting these on and sharing that information with you. We hope you found that it was a valuable experience today in our Coming to America series, your steps to EB5 success, that you're finding that these are worthwhile. And when you do get the next solicitation, the next announcement from us, we've actually got one coming up in just a couple of weeks. Be sure to watch for that. Then reach out to your friends, let them know as well that we are putting these presentations on. They're very informative. We'd love to have them as well. And so they're invited to be part of the presentation viewers. So again, thanks to you, Bruce and Dianne. I certainly appreciate you sharing your expertise with us today.
It's been a pleasure. Thank you, Kai, and wishing you all a very happy Thanksgiving, and look forward to seeing everybody again at our next presentation.
Thanks, Kai.
Thank you very much. Happy Thanksgiving, everyone.
Thank you again. Take care.
Thank you.